you're moving to San Diego, one of the biggest decisions that you're going to need to make is whether you're going to rent or you're going to buy. Making the wrong decision can cost you time, money, and flexibility. Depending on your individual situation, you could be better off renting or you could be better off buying. We'll talk about that today. If we haven't met yet, my name's Scott. I'm a San Diego realtor, and I help buyers and relocation clients navigate the ins and outs of the San Diego real estate market. When we're talking about buying or renting, I've seen clients do both, and I've seen them have success, and I've also seen it go wrong. Just to clarify, there's no universal right answer here. Each person's individual situation is going to dictate whether or not they're better off buying or renting. This is going to be based on your timeline, on your job stability, lifestyle, and your financial situation. The goal isn't to buy as fast as possible, it's to make the best long-term decision. First, we'll talk about when renting might make more sense than buying. And that would be if you don't know the neighborhoods yet. Maybe you're moving to San Diego for the very first time. Maybe your job is getting transferred and you're going to be relocating and you've never been. You've never visited San Diego, you've never been here before, you don't really know much about the neighborhoods. I've talked in past videos about how San Diego is not just one neighborhood, it's a lot of different micro neighborhoods, and it can really vary just 10 minutes apart. So if you are not super familiar with San Diego and the different neighborhoods here, it might be better off renting rather than buying initially. The second reason you might want to consider renting over buying initially is that if you might move again in 1 to 2 years. If you're not really certain how long you're going to be in the area, again, maybe job situation's a little bit up in the air, and you're just not sure, maybe look at renting initially until you do have that stability here. The reason being, when you purchase a home, there are a lot of transaction costs that go into it up front. Between your loan fees, your title fees, your escrow fees, other closing costs. If you're only going to be here for a year, paying those fees to move into the house and then having to pay fees again when you sell it might not make sense for you. You want to make sure that you're in the home long enough that you can earn some appreciation and build some equity before you have to pay fees again to go and sell it. The third reason is if you want to test the commute. The freeway patterns here are real. So maybe you're looking to rent somewhere for 6 months first, see how you like the area, test the commute to work, make sure that your commute time and the traffic that you're dealing with on the freeways is something that's manageable for you. And then once you've been there for a few months and you've kind of gotten to test everything out, then you might start looking at buying. The fourth and final reason you might want to consider renting before buying is if your job or income situation isn't very stable. The last thing you want to do is purchase a home, lock yourself into a mortgage payment, and then find out your income either drops or is going away. Where if you're renting, you have a lot more flexibility. You can move, you can downsize, etc. The big thing with renting is that it buys you flexibility. Now we'll talk about some reasons why it might make sense for you to buy rather than to rent. And the first thing is going to be if you plan to be in the home for at least 3 to 5 years. When you have a longer time period, it smooths out some of the market cycles. It also allows you to build some more equity, and so that way if you do need to sell in a few years, you're still pulling some equity out of the property, where you might not be able to do that if you were only in the home for a year or two. The longer time frame really does smooth out the market cycles. The next reason is going to be if you are already familiar with the San Diego area. Maybe you live here now and you're renting, or maybe you're relocating to San Diego, but you've been here before. You've come a couple of times for a visit or a vacation, or maybe you have a family member or a friend who lives here who's able to give you some information on the different neighborhoods. And so if you're a little more familiar with the San Diego area, then that might make more sense for you to purchase rather than to rent for 6 months first to kind of get familiar with the area. Number 3 is going to be if you have stable income and an emergency fund. You work in a job where you have consistent income, you're very comfortable in your job, you're not worried about getting laid off or anything like that, and you just feel that your financial situation is very stable and consistent. And you also have extra money set aside to either use as a down payment or your closing costs, and still have a little bit of money left over as an emergency fund just to be able to save for a rainy day. So if you're in a good financial situation, then that's another reason why you will want to look at purchasing rather than renting. The fourth and final reason that you'd be looking to buy rather than rent is if you're looking to choose your lifestyle intentionally. Maybe you already know the lifestyle that you're looking and the neighborhood that you want to be in, whether that's closer to the beach and the benefits of that, or being further inland and having a little bit more space. You're looking to intentionally choose that lifestyle and settle down and purchase a property that meets the needs that you have already determined that is right for you. The big thing with buying is where renting is going to provide you the flexibility, buying is going to provide you that stability. Let's talk now about some of the financial realities of buying versus renting. You're going to have a payment monthly regardless of whether you buy or rent. The rent payment is going to be based on obviously the size of the property and the location, but that's going to be pretty straightforward to figure out how much your rent payment is going to be. The mortgage payment, if you choose to buy, can vary quite a bit. It's going to be based on what interest rates currently are, and also your down payment is going to play a big factor into that. The bigger the down payment that you put when you purchase, the lower your mortgage is going to be, and the lower your mortgage is going to be, the lower your payment's going to be. So just comparing your rent payment to your monthly mortgage payment is not necessarily a straight apples to apples comparison, but it is something that you want to make sure you know how much you're going to be paying in rent versus how much you're going to be paying on your mortgage payment based on your down payment and the interest rates. The second thing you want to consider is equity. Obviously, when you rent, you're not building any equity in the property that you're living in. When you purchase a home, you are building equity. And one of the things that I do want to explain that a lot of people don't realize is you're actually building equity in two different ways. The one that most people realize is appreciation. If you buy $1 million property and it appreciates up to 1.1 million, you've gained $100,000 in equity. That's the difference between what the property is worth today versus what you paid for it. But you also build equity every month on your payment. As your mortgage payment drops little by little each month with every payment, you're building equity on the bottom side as well. The property, you bought it at $1 million and you started out with an $800,000 mortgage, you'll have $200,000 in equity that you're starting with. And every month, as you chip away at that mortgage, you're building equity. So you build equity on the bottom side as you chip away the mortgage, and you also build equity on the top side as the real estate appreciates. Speaking of appreciation, let's chat about that for a second. Obviously, one of the benefits of owning a home is appreciation. Anytime you hold on to real estate, in the long term, it's going to increase in value. If you compare appreciation in the city of San Diego versus the rest of the country in the US, San Diego typically has a very strong appreciation compared to the rest of the country. Something else to consider in the financial picture is going to be the cost of maintenance. If you are renting, maintenance generally isn't something that you have to worry about on the property. But if you do own the home, it is your home and you are responsible for all the maintenance going forward. So just keep in mind that home ownership does require maintenance. Over time, things are going to wear out and they're going to need to be replaced. You might buy a home and 2 years later, you're going to need to buy a new water heater. So just make sure that you are factoring those extra costs into the equation when you're looking at renting versus buying. Don't forget about the maintenance. Next thing to consider is going to be your HOA fees. If you purchase a property that has an HOA, such as a condo, that is going to be an extra fee that is going to need to be paid each month. One thing to keep in mind though is that if you do have an HOA, a lot of times that can include some of your utilities. For example, your water, sewage, and trash bills are generally going to be bundled into the HOA and not a separate bill that you're going to have to pay. Where if you purchased a single family home, those would be additional bills that you would have to pay. So that kind of does help balance out some of that HOA fee. The other thing too is a lot of times the HOA fee will cover exterior maintenance of the building. So your roof or your siding or something like that. So part of that HOA fee can offset some of the maintenance that you would have on a single family home as well. So just make sure you're factoring in that HOA and everything that it includes when you're looking at your monthly budget. Lastly, you have some other expenses as well that you want to factor in, such as your property taxes and your insurance. And then also, don't forget about tax savings as well. When you purchase a property, you get additional write-offs. So make sure you're chatting with your CPA or your tax professional to see what kind of an impact and what kind of savings you're going to receive if you do decide to purchase. A few misconceptions that I hear from either buyers or potential buyers is they think that renting is throwing their money away. This isn't necessarily always the case. When we talked about some of the benefits of renting, we talked about how renting buys you flexibility. If you are looking to rent for 6 months before you buy, don't necessarily think of throwing the money away for 6 months. Just think of purchasing some flexibility for the next 6 months. Another thing is people rush to buy because of fear. They don't want the property to appreciate too much, or they think they're going to get priced out of the market, so they make a rush decision to buy. Lastly, they underestimate closing costs. Make sure you have a good understanding of how much out of pocket you're going to need to bring to the table in order to purchase. It's your down payment, yes, but there's also additional closing costs due to the loan and the escrow and various other things as well. So make sure that you're chatting with your realtor or your lender and you're getting an accurate number on how much it's going to cost you to come out of pocket to close on that property. If you're moving to San Diego and you're trying to decide whether you want to rent or buy, or maybe you live here already and you're trying to decide if you want to keep renting or purchase, feel free to reach out to me. I'd be happy to discuss your individual situation and go over some of the pros and cons of renting versus buying specifically for you. If you found this video helpful, please go ahead and like and subscribe, and I will see you next week.